under criminal investigation for Medicare fraud, although I'm not sure that is as bad as it sounds. Buffett says he stepped down after finally feeling his age. I'm just getting too old. Let me buy the quantum. There's qubits. What's a qubit? Yeah, sometimes those Middle Eastern deals aren't what they seem. But it's not bearish, that's for sure. This is the guy you should be following. Not Burry, not Pelosi. This is the guy. This is why you watch Shkreli.
They think it's about growth often, okay, or something new. Neither of them, those things in themselves are, to us matter. Let's say the types of investing that we do is high barriers to entry, the moats that Warren Buffett has talked about. Now, before we dig into that, can a distressed asset of a piece of real estate that's selling at half price because of a liquidation also be a good investment? Yes.
So you can have a zero discount rate, but the key is all cash flow streams eventually go to zero, right? So, for example, in pharma, the cash flow stream of a drug is virtually guaranteed. People are going to stop taking the drug. Once you're on a drug, you're on it, especially if it's chronic illness, right? But the patent expires, so your cash flow goes to zero. So what businesses have a moat? What businesses are going to stay around for 100 years? It's pretty hard to determine. If you look at the Dow Jones from 100 years ago, these are very weird companies that you may not have heard of. Dow Jones constituents 100 years ago. There are 12 original companies in the Dow Jones, okay? How many of you think of that? How many do you think still exist? American Cotton Oil, American Sugar, American Tobacco, Chicago Gas, Distilling and Cattle Feeding, GE, Laclade Gas, National Lead, North American, Tennessee Coal and Iron, U.S. Leather, and U.S. Rubber. GE is the only one. Just keep in mind that, some of them exist through M&A, no doubt. Businesses just don't disappear, but a lot of them are smaller. So keep that in mind. Copper mining, smelting and refining. You can combine all the mining companies. They still wouldn't be worth putting in a Dow. International Paper is kind of like a mid-cap now. So they're still around. They're just not valuable. So what moats, what cash flow will endure is the question, because when you have confidence, your discount rate drops. Banks could be good, but banks depend on management. You make bad loans, that's the end of the bank. So that's not really a moat. Steel, well, technology changed steel. Steel become a little less important. Nothing stays forever. B.F. Goodrich, Western Union. Western Union was one of the biggest companies in the world. Westinghouse, sugar refining. Sugar refining? The American Sugar Refining Company. What? The American Can Company. The American Beet Sugar Company. These were your leaders? Studebaker Corporation, of course. They're Studebaker. I'm old enough. I remember Studebaker. I read the 10K. They had on this paper. You couldn't even turn the page. It was such brittle paper. For the 10K at the annual meeting, I used to go to the meeting in a horse carriage. They send me the next 10K. It will come in 3 weeks after the results. Sears Roebuck, Anaconda Copper Mining, Baldwin Locomotive. There's DuPont. That was a real one. You're real for that one. American Tobacco Company, I think, became Philip Morris. There's AT&T. AT&T was kind of a forever company, kind of like what Chris Hohn is saying. I mean, what's the discount rate, right? And if you're trying to give these shares to your kids or something like that, then you kind of don't have a discount rate, right? As long as the cash flow is there, you're not really discounting it because, the biggest risk, there's kind of like two, the first formula you learn in Briley Myers is this dividends divided by what? Risk. And you could do dividends divided by risk minus growth. And this is it. This is how you price an annuity, basically, right? This is like the fundamental. We don't sell at API yet, but we will at some point. This is the fundamental. Every field has a fundamental kind of formula. This is the fundamental formula of finance. This is kind of the key thing. So growth is something that's really important. All three of these things are important. So this is the cash flow. This is the growth of those cash flows. And this is the risk to those cash flows, including time value of money risk and things like that. So if D goes down, you have a problem because nothing else matters, right? The rest of the formula is irrelevant. If if D is pre-planned to go down, like pharma, we know the drug's going generic. That's part of the game, right? But Coca-Cola, I was going to say KO. Coca-Cola, there's no plan, at least, for revenue to go down. So this dividend should be good, right? There's no game plan to that's not part of the business model. Their plan is to grow. Now, can they grow is another question. The game plan is to grow, but what's the risk? What's the risk that in 50 years they have no cash flow? And how much do I discount it by? If I discount it by 2%, that's my risk-free rate, or that's my inflation rate, then my even 2050 cash flows matter, even 2070 cash flow matters. Risk is kind of subjective, and it becomes objective after you receive the cash flow. Growth really doesn't matter that much if you can secure the bag and that you can believe that this dividend stream, this income stream is for sure, this discount rate drops like a rock. There's only so many companies that have that. That's why people focus on moats so much and play around with the numbers, open an Excel. So let's say a company is going to grow at 1% a year, but here's 150 years, 160 years of growth. And then I got a company that's going to grow 10% a year. No joke, 10% a year for 10 years. What's the more valuable cash flow stream? I know all of you people, okay? Yeah, you watching right now. You would say, why would I buy this company? That's crazy. I'd much rather buy this company. It's going to grow. Let's do the math. Yeah, you people. It's a lot of value there. Let's say $1 billion or $1,000, depending on how many zeros you want to put in front of it. It's 10 times earnings too. Not bad. This no growth company is worth 8 times more, simply because you can see that it's going to be around, and other investors will pay that premium. You don't have to live that long. What happens if the fast growth company just has a decay in cash flows? Doesn't go to zero, but it just decays. Doesn't change much. Doesn't change much. Added 30-40% to the matter. Or if it starts declining really slowly, it's still going to decline to zero. That's the problem. Cash flow is a long time away from now. You don't know what Microsoft's going to be doing in 2030 or 40 or 50, do you? Or Apple. You're just trusting the guys that are running it are going to be good guys, but it could be anything. Berkshire's assets have a moat. Berkshire itself doesn't have a moat. It's the risk. It's the risk to the cash flows that matter. And that is embodied in the discount rate. If you discount the cash flows at 7%, you're saying that there's a good chance these cash flows won't show up. So you got to find the company that has the strongest. This is what this guy's been talking about. I don't know if you've been listening. Some of you haven't been listening. The strongest moats to cash flow.
Our companies have recurring and predictable revenue streams of essential products, right? Mm-hmm. Yeah, and so
do they have to grow?
Depending on valuation, not necessarily.
Amazing. See what he just said? Kind of took the words out of her mouth. Do they have to be growth companies? He said not necessarily. Interesting, right? So is Facebook and Instagram still going to be here in 10 or 20 years? I don't know about that. Network effects can sometimes be a little overvalued, in my opinion.
Or that's not necessarily at a fast rate, okay?
Club Penguin's gone.
And growth can come from two forms, volume and price. So you have to break it.
Volume and price, who just said that?
Down. Now, why isn't growth as important as investors usually assume it to be? Because you can have profitless growth.
Regulation.
Yes.
See how he says yes? That's how I feel.
I was always willing to look at the company fundamentals and not try to guess the stock market, okay? And focus on macro or trading, yeah?
Okay, it's very simple. Yes. 2 columns. Maybe it's even better like, do it like this. Do fundamentals. Don't macro trading.
Most investors are not fundamental. They trade actively. They look at data points. They say, what's the catalyst? They don't really know what the company does. So I think...
What's the catalyst? The mark of a noob investor. When I hear that person's done in my head. It's done. It's over. What's the catalyst?
The fundamental approach has been key. Long-termism is key.
Okay, is Joel Greenblatt as successful as Warren Buffett? Is Joel Greenblatt as successful as Chris? So Ken, you're saying he underperformed the S&P. I want you to think about how silly this is. Okay, so we're just gonna make a little thing here. S&P versus TCI, okay? We're just gonna go 2024. We're just gonna go year by year, all right? So I have some private data, may or may not. Well, let's leave it at that. So those are the last 5 years, okay? The last 5 years for him were 15, 33, minus 18, 25, and 14. So how does this compound? Let's calculate that. Okay, so about the same as the S&P. Say underperformed, that's kind of a stretch, right? It's amazing how well the market's done. Yeah, I think that's basically the same. Well, Berkshire is a stock price, but yes, we can. Okay, so that's over 5 years. Let's do over 10. Does this work? I don't think that's over 6. So over 6, he's better. Over 7, he's better. Over 8, he's a lot better. Now we're almost double territory. So product? I don't think you can do this, right? I don't know, man. Looks better. That's a double performance. Come on, man. You made me do this whole thing. So only recently has he kind of dropped in performance. On average, he's done 10% better than the S&P. Let's see here. Better way to look at it is how many years did he outperform the S&P? Okay, so 67% of the time. No, not that good, Peck. 15% for Buffett. Average annual, 19%. Average for the S&P is 10%. Big difference. 51% higher risk-adjusted returns. I don't invest exactly like him. We all have slightly different things. Obviously, I like to short. I think there's so much alpha in short, especially now with active management. It's distorting a lot of prices, which is it's a golden opportunity. No, I'm not short only. Definitely not. Well, you have to define what's the word catalyst mean. I mean, of course, companies are going to have results, and you're going to have to pay attention to the results, but you don't know when the results will differ from expectations. I think there's a few ways to deal with it. There's obviously no ideal way to deal with it, but the alpha is the pro. What he's talking about is the con. There's time, there's activism. A lot of people don't want to be short activists. I have no problem doing it. It's hard to go out and scream at CEOs, but I do it. And then, patience, I think, is important.
You know, when it falls...
Look at 𝗐𝗏. 𝗐𝗏 basically worked for us right away, right? We made huge percentage return, huge. Meme coins worked for us right away. Sometimes they won't work right away, and you just hang in the trade. It might lower your average rate of return, but some trades are stubborn, but you don't give up on them. I don't think there are too many hedge fund managers that give away their fees. I mean, that is he's definitely a different kind of dude for doing that, right? Not too many hedge fund guys saying, I don't want to give away my fees. Well, he makes billions in fees, but he just gives them away. Built different. I couldn't do it, all right? I ain't doing that. That sounds cool, bro, but I need my $40,000 Ciroc. And, they give me a little bit more of that champagne, thank you. Good hedge funds have beaten the S&P. There's a lot of people who want to try. EcoR1 is a hedge fund. I actually don't know how much shorting they do, to be honest, but They've had a rough couple of years from what I understand. 200 bands. Yeah, I need that. Give me that 200. Promise I'll grow. I promise you. This is a company called Novartis. Voltis. We've looked at UNH. I've talked about UNH ad nauseum the last 2 days. Yeah, Entresto isn't going to last forever. That's for sure. It's nearing the end. What is that leap thesis? What does that mean? How high somebody can jump? Florida doesn't have any business. Can't build a software company in Florida. Nobody's going to Florida to do software. What is it about this new generation that doesn't know how to write a complete sentence? I think hedge funds are moving to Miami for tax reasons, legal reasons, certainly weather reasons. But, there's no business down in Miami. There are a lot of big software companies in Miami now, a lot of AI companies. I'm bearish on UNH. But yeah, I do think I'm going to have a news agency of some kind, which you always end up becoming what you hate, right? Start hiring journalists. What makes you think you'd be a great journalist for Godel? Well, I'm here to highlight the plight of the disadvantaged. Okay, we're a business network, right? Yes. So why do you think highlighting the plight of the disadvantaged is something that our readers care about? They don't, but they should. If you don't hire me, I'll sue you. Yeah, I'll probably have DEI department for sure. You could hire like 7 journalists for one software developer. This is like 25-year-old software developer walks by. All the journalists, they're like plebs. Yeah, Jinzo, it's just that, if you're running a news system, you kind of want to have your own proprietary news to some extent. And there's a way to do it better than I think a lot of the others have. Okay, so they only get the 150 if they achieve the milestone. So they don't get it but it has to all come from somewhere, right? Oberlin's not giving money away. Oberlin may purchase $600 million of senior secured notes. 150 would be funded at the company's option, contingent on FDA approval. So under these terms, Oberlin will have a right to receive a regulatory approval milestone payment, payable quarterly for some years, and single-digit royalties on troriluzole. It sounds like it doesn't really change the game for them too much. You don't want to get that heavy in news. I think Bloomberg is a good lead to follow. I think if you're just starting in finance, the best advice is to be humble and be patient. You want to take over the world and you want to be ambitious, but you also have to do it in a determined fashion that's not too fast, not too slow. I always thought, I had to go faster and faster or the world would pass me by. But make sure you focus on your integrity. Probably the biggest thing on Wall Street is nobody says something bad about you. Everyone has good things to say. And that's challenging because it doesn't mean that you're just a nice person. That's easy to do. It is more about, yes, he has high integrity. Yes, he's a good investor and he's got high integrity and I like him and he's a good person. That's kind of what I'm talking about. There have been things I've done that I'm not proud of, but that's how you live and learn. Yeah, UNH may rebound. There's no doubt about that. There's a lot of fear in the stock. When you short a stock that's going up like crazy, you plan for it. I mean, it's part of it. UNH has a fundamentally flawed business model. They're basically, what UNH does is they take money from companies and they spend that money on their company's employees' healthcare. And this is something that's done so that the company doesn't have to do that themselves. In fact, no company really does that themselves. And that's really it. For all that administration and all that spending, the company pays about 15% on whatever the healthcare costs are. Seems reasonable, right? Well, the flaw in the business model is that the company hires the managed care provider not just for the sake of organizational benefits, but also such that the managed care provider is allocating the healthcare utilization correctly. So they're trying to make sure that healthcare isn't overused or underused, and that the managed care is getting the best prices for their money. Unfortunately, that's where the problem comes. The there's an agent principal issue. The principal, I'm going to say the agent here is incentivized to grow earnings. They're publicly traded companies. The principal wants to accomplish several things: healthcare coverage that's affordable, that has the right amount of utilization, not too much, not too little. So I think that over time, whether it's technology or other things, that this may change. This used to be a more opaque system before technology advanced, and I think that the system has sort of gotten so distorted that in some ways it's breaking. And so we'll see what happens, but in some ways it's a very opaque business. Chegg is hanging in there. This company won't die. They made money last quarter. Yeah, insurance conceptually has a similar problem. This drug Pluvicto for Novartis has done amazing. Prostate cancer. Yeah, Sarepta was down a bunch earlier. Now it's almost flat. So it's somewhat underperforming Quantum, which is nice. 2.5 billion Swiss withholding tax. What? The annual dividend of Novartis, a third of it goes to Switzerland? Yo, I've never seen that before. It's money meant for shareholders, but it gets diverted to the government. A third of the dividends of a company are going to the government as taxes. I've never been a fan of that Biohaven drug. So you get the money back if you're a foreigner? They just want to hold it? Keeps them warm? Most of the shareholders aren't Swiss. Pen and paper, Matthias. He's actually got a big old spreadsheet. They used to be actual sheets. It's not called a spreadsheet by accident. There used to be a sheet. It was a spread across your whole desk. Computer's new, buddy. Yeah, I don't know. Each fund's got its own pros and cons, you know? I think if you're not shorting in biotech, it's kind of a short seller's dream. I don't like UNH, man. The temptation to buy the falling knife is understandable, but probably something you should avoid trying to do. I think Sarepta and ADMA are roughly the same. Feel a little more confident in Sarepta. Actually, quite a bit. I'd say quite a bit more confident. It's CAR T for autoimmune. It's all the above. I don't think Trilliazole really works. Riluzole didn't really work. Nobody can point to a mechanism. But if you look at the clinical trial data, there's something there, possibly. So maybe they will get FDA approval. I mean, if they get FDA approval, the Biohaven's an easy double. Yeah, anonymous. Okay, I got to get ready. Let's go to this meeting. I'll see you guys later, probably tomorrow. Thank you for stopping by. Go to GodelTerminal.com. Chat with me there.